Okay, let's go ahead and reconcile our credit card. Okay, make sure it's selected, ending balance. Okay. Do we have finance charges? Yes, we do. Let's enter it. Okay, once we move forward in complete reconciliation, this will become an entry that we book. So what's happening in terms of debits and credits? Let's make sure we understand. They're going to add the finance charges to our credit card balance. So our liability will go up. To go up, it has to be credited. What else is happening? Well, our expenses on interest and finance charges right here, right here, it's going up. It has to be debited to go up. Here it is, even though it's entered once, it is a debit to account 61,700. It is a credit to account 21,100. Let's start reconciliation. Okay. What do we have? We have this amount right here. Okay, let's just adjust columns a little bit. Okay. It's a little bit challenging, but I'm sure we can manage it. Okay. Okay, here it is. $42.88 right here, already checked. What else do we have? We have some of our charges right here. Okay. Make this one a little bit bigger. Perfect. All right. 485 right here. 128.65. Just make sure, yeah, that we can see what we're doing. All right, right here, right here, right here. Okay, and then we have our payment right here. And we're at zero. Okay, we did a good job. We booked everything correctly, right? So we're gonna finish it up. Done. Okay, go to summary, credit card. Here it is, right? Make sure that balance matches. Yes. Payments match. Charges match. All good to go. At this point, we would print it and attach it to the credit card statement, indicating that we're done with reconciliation of the credit card. Let's move forward with reconciliation of our bank statement. Okay, make sure we select it. Okay, ending balance. Enter that. Okay, ending date. Okay, do we have service fees? Yes, we have our $25 fee. Okay, good. Bank service charges. Okay, again, once we move forward in complete reconciliation, this will be booked as an accounting entry, and we will see it during reconciliation. So let's make sure we understand what's happening. $25 will be deducted from our bank account. Bank account is an asset. To reduce it, we have to credit it. Right? Makes sense. What else is happening? Well, our bank service charges expense is going up. For expenses to go up, they have to be debited. Here it is. Debits and credits are in balance, right? This amount right here, it's a debit to account 61,600, and it is a credit to account 11,100. Okay, let's move forward with our reconciliation. 25 right here. Okay. All right, let's make sure we adjust our windows so we can see everything clearly when we reconcile, including our, there it is. All right. So what do we see? We see our checks right here. it is. What else do we see? We see our payment. All right, so now, just like before, we have to book our deposits, right? All of these deposits. And we have to book the draw and the merchant account charges, right? Those are the fee that bank charges us when they process payments from our customers that use credit cards. All right, so there are many different ways. We've showed it before that we can use. Let's rehash some of them, right? So for example, with this one, right, to indicate the differences, we could book them all individually, but we could book them in one transaction. So let's just, again, take a look how the debits and credits will be impacted. We would have to use one single date though, and when we do that, when we do lump sums or mass booking, we use the end of the month. All right, so let's use general journal entry because we can see debits and credits there easily. All right, so let's say this is our deposits. Okay, so let's take a look what's happening. Well, our bank account will be increasing, and it's increasing when we debit it. So let's do all those. Okay, okay. Again, what it does, it provides additional level of details, right? It's not going to be as detailed as if we booked everything individually as we showed before, but as you will see during reconciliation, it will add a little bit more details, and it allows us to practice our debits and credits, right? Okay, here it is. You're like, well, where are the credits? I'll do that, right? We'll do those. Okay, I'm just kind of switching things up to make it interesting, and again to make sure you understand the debits and credits behind every single transaction and what's happening, right? So see this amount right here, deposits and other credits, is showing up right here. Isn't that awesome? All right, so we know that each one of those is increasing our bank account. What is the offsetting credit? It's sales. So we could essentially book them all individually like that, or we could lump sum it. So again, and we could detail it the other way around, right? And we will do that in the future. So again, let's say this is cash. This is cash. Just to provide those details, this is merchant account. This is cash sales, right? This is cash sales. Again, the key is that we're going to achieve the same results. This is merchant. Okay, debits and credits are in balance. That's what basically matters, right? All of these accounts, which is the same account, we could have entered it as one line item, but it's fun to show those details, right? All of those are debits to account 11100, and they increase it. All right, what else is happening? The sum of them we could have entered in individually, but let's save some time. 41100 sales / revenue goes up when it is credited. So and we can check right here that it actually equals that. So let's go ahead and save a new. Now we can actually just exit it. Let's see. You see, all of those things, all of those deposits are now showing up at the detailed level, not like a lump sum. And again, if we want those level of details, we could essentially achieve it, and we know how to. Let's go ahead and reconcile items that we just booked. Okay, so you see now, instead of a lump sum and checking it right here, we actually see them. So let's check them off. Okay, here it is. Okay, we're still off, right? But that's okay because we still have draw and merchant account fees. So let's go ahead and book those. And we can book them as one entry, right? So May bank expense, right? Okay. So let's first of all see what's happening. Well, we know that our merchant account expense will go up, right? So, okay, expenses go up when debited, so we can enter that part. All right, what else is happening? We know when we take money out of the business, in this instance, we're taking them home. We're not going to use them for business purposes, so that's a draw. And we know that draw is essentially, it's an equity account, and an equity is reduced when it is debited. Again, we've covered that before. We'll cover it again. It's kind of counterintuitive. It's kind of like accumulated depreciation, right? But still, when we close it out, it is a debit to equity, and equity is reduced when debited. So let's go ahead and enter it. We're looking at 6,350. Simple math, we can do it right here. Okay, so that's our draw. That's our merchant fee. Okay, so what else is happening? Well, our bank account is going to be reduced by the sum of this. We could break it down, but I'm pretty sure QuickBooks Online is capable of doing basic mathematics, right? So here it is. What is happening? This account is being debited, expenses go up. This equity account is being debited, equity goes down. This account, bank account, is an asset, is being credited, it is reduced. So here it is, save and new. Okay, where are they? They're showing up right here. Let's make sure it's new. Alright, so here it is, right? It shows up as a sum because for the bank account we lump sum it, but that's okay, because we can check it by clicking it. And if we get with a 0, it means we did a good job. We did a good job. Okay, so let's go ahead and mark those. And there's different ways to do it, and what's important, your debits and credits, and you can see how it impacts reconciliation. But ultimately, if you know your debits and credits, you'll get to that 0. Finish now. Okay, let's view our reconciliation. Okay, here it is. Again, see, because we did lump sum, it kind of summed those two up. Again, we could argue, hey, you shouldn't add, draw with the expenses. It did align it to the right expense and draw account, so that's the key. And in reconciliation, what's important is that we closed it out and we didn't have any difference, right? Deposits are correct, withdrawals are correct. Again, here it is, and you know the consequences of booking it one way or another. All right, at this point, we're done with May.